Well, ICICI Bank's numbers, well, not as much of a beat as we've gotten used to seeing ICICI Bank. In fact, when you're looking at the ROA number, and that kind of sums up how the bank's performance is, we're used to seeing an ROA number of 2.3 to 2.4%, or even sometimes 2.5% where ICICI Bank is concerned. This time around, that ROA number has come at just 2.1%. So while your net NPA and gross NPA numbers look decent, no worries at all with regard to asset quality, the provisioning for some reason has come in at 2,555 crore, which is what has caused a miss with regard to profit after tax. Also, some part of that miss is on the net interest income number. That has also come in slightly lower than expected. So you're seeing across the board, this is a bit of a weak number versus what one would expect. The positives, let me talk about that as well. 4% sequential growth on the advances front. So we've seen a decent growth coming in on advances. When you're looking at one more piece of ICICI Bank, Sandeep Bakshi and his reappointment, this was obviously a crucial factor which we were going to look out for where ICICI Bank is concerned. He's been reappointed, of course, subject to RBI and shareholder approvals as well, but only for a period of 2 years. Sandeep Bakshi has spent or has been Managing Director, CEO of ICICI Bank since 2018. And therefore, he was eligible for reappointment for another 3 years, but that's not come through. He's now reappointed only for a period of 2 years. I don't know what that means, or I don't know the rationale. We'll wait for management commentary. But let me bring on board Aditya Shah, founder, Hercules Advisors, and Avinash Gorakshakar, Head of Research at Profitmart Securities. Welcome back, both of you gentlemen. Avinash, this time I'll start with you. Avinash, let me try and understand what you're making of the numbers, because it seems like a very, very mixed bag of numbers, and that provisioning number doesn't, it seems to somewhere, create a huge miss in terms of the profitability. I wonder how you're looking at both of those numbers, the profitability number and the provisions number, and how you're looking at it overall.
No, I think, Harsh, numbers were expected to be weak, but I think the provisioning number which has come out, definitely it has been much higher than what our expectations were. We were expecting about 1,700 to 1,800 crores of provisioning. The number which has come in clearly is a very surprising number, because the bank always, had a very decent asset quality number. But these provisions, I think we'll have to check once the management commentary is out, that on what account these provisions have come in. And secondly, the NI number has also not been very encouraging. I think, for a bank like ICICI, as you rightly pointed, the ROA number was something which was always better than all the other private sector banks. So definitely some amount of concern there. And I think clearly in terms of, the growth momentum, I think Q2 was also slow. Now Q3 has also been little bad and much lower than what the street had expected. So I don't think you're going to see any kind of bump up post the numbers. In fact, after the numbers are out, probably next week, Monday, I think the stock could open a little bit weak. Definitely this is not an encouraging number from a bank like ICICI Bank. And most importantly, I think the provisioning number, hopefully we think that it should be a one-off. Because if it is not a one-off, then I think the market would be a little more concerned going forward.
Okay. Aditya, are you concerned with regard to the numbers, or are Avinash and me concerned for all the wrong reasons?
Oh, absolutely not. I am not too much concerned. The asset quality has shown a mild improvement. The bank states that in Q3, there was some Kisan credit card credit cost that they had got, which led to an increased provisioning of about 5,300 crores. So from my perspective, I don't think this is any bit of concern. If you look at the advances, the important thing, if you look at the advances have grown at about 11.5%, which is fairly okay when the systems loan growth is at about 10 to 15%. The deposit growth is at about 8.7%, and the asset quality has improved from about 1.58% to about 1.53%, which is fairly okay. So again, as I said with HDFC Bank, I don't think there's a negative, or I don't think there's a positive, but there's nothing spectacular about the numbers. They're fairly steady numbers. I'm okay with the number, and I don't think the stock price will do anything positive given these numbers.
Kisan credit card generally you see an impact, and Aditya, let me take you up on that. You see an impact of that in Q1 and Q3 is what ICICI Bank has disclosed, but they haven't given us a number, right, as to how much of this 2,500 crore is coming from Kisan credit card.
That's correct. So the gross NPA additions were about 5,356 crores, which they have not given a split for. The credit card they have not given a split for. I think that will be given during the call, and they will explain what was the impact of those credit cards. But from my perspective, look, Harsh, it is a large bank. Again, ICICI Bank is also a large bank. Little bit of asset quality up and down, quarter on quarter, it's fairly okay. But the performance is steady. The more important point is ICICI's performance is steady. It is doing well. And up and down performance, little bit up and down will continue. We as analysts look at it with a microscope and a lens. But from my perspective, steady results, nothing to complain about. But there's no upside to the stock given these results.
So, Aditya, I buy your argument, and Avinash, I'll come to you in just a minute from now once I complete this argument with Aditya. So, Aditya, I don't deny the fact that that a one-off impact on provisions is a concern. My only concern is that Q3 last year, the provisioning was around 1,200 odd crore, between 1,200 and 1,300 crore. This time around, it's at 25 to 2,600 crore. And that's where my skepticism stems from. And that's why I feel that these numbers look a bit of a miss versus estimates. I'm trying to gather as to you're gathering comfort from, of course, the medium term, which looks pretty. But the fact that ROAs have dipped from 2.3 to 2.1 and provisioning has gone up more than doubled, or rather doubled versus last year, even if I take seasonality into consideration. Is that at all a concern for you in the short term, which means that stock is trading at 3 times book? Do you believe that this could spell concern on Monday morning?
I don't think there could be a little bit of downturn on the stock. See, even Sachin does get a low score at some point in time during his career. The slippages, we need to first understand from the management how many of them were one-offs and how many were actual slippages that the bank experienced. That will give a clear outlook on where the stock price would really move. As I said, estimates, what estimates are, how the bank performs are two different stories. From my perspective, yes, there is a little bit of elevation in slippages, but first we need to understand the nature of those slippages and then comment if the results were good or bad. As I said, the stock could take a little bit of downturn on Monday morning, but from there on it will recover. The stronger point is loan growth is fairly okay, deposit growth is fairly okay. Slippages, we need to understand where are the slippages coming from. I think that is the main point for ICICI Bank. In any banking result, it is more important. But given the stability at ICICI Bank, only asset quality will decide what really happens, and the details of that will come on the con call.
Perfect. Okay, Avinash, let me come back to you. This entire leadership rejig, we've been through a painful grind where ICICI Bank is concerned because of a possible overhang of Sandeep Bakshi not getting that 3-year extension or not opting for it himself. 2 years is now what has been disclosed. A hit, a miss, what is it for you? Is it a positive? Is it a negative?
No, I think, my guess is that it's a mild negative because clearly post Sandeep Bakshi coming, the bank had definitely shown a very strong kind of improvement in its operational metrics. But I think why his extension has not been given a 3-year and he's given a 2-year, I think is something which I think we'll not be able to analyze as of now. But typically, in a bank like ICICI Bank, there's a very good leadership kind of stable already there. So I think despite the fact that his exposure or his steerings is going to be for next 2 years, I think the bank definitely would have done some homework on the leadership grooming going forward. So typically, for a large professional private sector bank like ICICI Bank, I don't think things are going to get completely derailed, obviously because of this decision. But I think definitely in the near term, markets would obviously look at operational metrics. If the numbers are solid, I think the markets would take console of the fact that at least, the numbers are coming out properly. But yes, I think definitely, I think he deserved a 3-year term, but I think he's been given a 2-year term. So I think that will be a mild negative, but definitely not going to impact the stock price or the market sentiment, for the stock, immediately. These are not things which are going to be on a panic mode. So that to that point, I think the markets are not going to take this issue very seriously.
Aditya Shah, your take?
So from my perspective, Harsh, a leader for the bank is very important. Sandeep Bakshi did script a big turnaround in ICICI Bank after Chanda Kochar really left. As Avinash sir also said, that this is a mild negative. However, the street will always see over the period of next 1 or 2 years who is being groomed to take the meter from Sandeep Bakshi. From my perspective, a near-term negative, but I think ICICI Bank is a strong enough bank that they will find good people to lead. Uday Kotak left, and Kotak Bank was able to find an outsider. Similarly with HDFC Bank. So I think that they will be able to find. However, we need to clearly monitor this development at ICICI.
Okay, and we will monitor it because you'll have the earnings con call, and we'll cut to that, and we'll try and get a perspective on what is being said or what's the rationale behind just a 2-year reappointment. I'll be very surprised if this is not discussed and analyzed more in detail between today and market open on Monday. Thank you so much, both of you gentlemen, for coming in and speaking with us. This has been engaging, to say the very least. And thank you so much for coming in and giving us your views.